right, good morning, everyone, to the Insight Hour. Now we've got some people hopping on. Good morning, Lee. We've got Alberto in the house as well, and we'll get the show on the road. So, it's all Q&A format. So go ahead and let's dive into the topic. So, what would you guys like to talk about?
Okay, I mean, as I was saying before, commodities have had a hell of a week this week. Gold, silver, and copper. And I was looking at copper sector stocks as well, which are looking interesting. Finance banks, some of them, and also some insurance companies and restaurant stocks. So let's look at all three if you can.
All right. You tell me. Well, what would you like me to pull up first?
Well, copper, seeing as you got it on there, let's look at it.
Okay. Oh,
Doing really well in the past 3 or 4 weeks, right?
yeah. This is a daily chart. I just switched over to a weekly, and yeah, the past several weeks, it's been great. It had this consolidation here. So why don't we walk through this exercise, right? So if we were doing a
Mhm.
Stan Weinstein analysis, where is it over here? Well, what's this section?
That's the stage one.
Okay.
Stage four going into stage one.
And where does stage two start?
I reckon when it's breaking through the red, which is what, the 50 day? No, the 10 week. I reckon it's around there. That
Here?
no, a bit further on,
Here?
that huge wick breaking out of the
This one.
50. That one. That one
Yeah,
is a
so
clear stage two.
yes. That is correct because stage 2 isn't just being above the this is a weekly chart, so this is a 10-week line, but the 10-week line and the 50-day moving average, they're very closely related.
Mhm.
Um, So it's not just being above that, but it's when prices starting to break above resistance, and you have both the 10-week line and the 200 starting to curve up, and you have that on this day here. So that would be the initial entry where you can start to get into price. What often happens when you start these stage two uptrends is that price will break out and then pull back. And when price pulls back like this, that could be your second chance to get in. And
Mhm.
so price did follow through there, and so it's been off to the races. Right now, where price is at, we always want to be mindful of where's price at now. We'll take a look to the left of the chart, see if there's any kind of resistance, and there is a level of potential resistance that it's gotten to right at around here from May of 22.
Mhm.
And we want to be mindful of, well, what was the velocity in getting there? And you'll often see this. You'll see this in commodities. You'll see this with a number of high type flags that'll develop too, because many of the high type flags that end up developing are in the beaten up names, and then they have this huge run up of 100% in a few weeks. Then they build a flag area, and then they're getting ready to potentially go again. I believe that's what happened with ARQT a few weeks ago. Yeah.
Yeah.
Yeah, right. So it had that huge run up. It pulled back. Great entry. Great move out of that entry. But I was selling aggressively as it started to get up here. Why? Because well, general market was heavy, and you look to the left, and there's all that resistance there. So does this have the proper conditions to not just give a nice quick move, but to charge higher? I didn't think that it did then, and that was the case there. And I bring it up because, well, when we were looking at copper had a sharp move as well. Not a high type flag, but a sharp move. And it's right by long term resistance. So
Mhm.
I would be careful.
Okay. I was looking at the copper stocks as well. SCCO, FCX, HBM.
Oh, yeah, that's had a great move.
It has. Yeah.
Great move. Is it done? Well, maybe. Well, how many
Yeah.
danger
Well,
signals?
it's
6.
teetering right there at the top, and there's like indecision area right now. Whether it's consolidating or not, I'm not sure. Let's see. But obviously, the underlying, which is always what you have to look back at, the commodity itself is teetering up there in higher ground. So let's see what that does, because that will clearly impact the stocks as well. FCX is the other one.
FCX.
Report.
Yeah, looks about the same. Same number of
Yeah.
danger signals. And if we look to the left of the chart,
Left.
it's also near a prior resistance area. At the very least, I would expect it to consolidate.
Yeah. Yeah. That's the
And
best
depending on what kind
scenario.
of
Yeah.
a player you are, too, if you're a swing trader, hopefully you've taken something off
Mm.
at this point. If you're looking at this long term, right, and building something, well, it tested the 21 EMA, and now the 21 EMA is rising. Maybe you get something more out of this, but it is near major
All-time
resistance, so
highs.
I would be.
Yeah. Yeah. And then the other one is HBM.
HBM. Yep, similar deal. Less danger signals, but similar deal as far as resistance goes. The probably heavier resistance from back here.
Yeah. That looks like the pole though on a flag, right? Well, it does to
Well,
me. You tell me.
it doesn't. It's a flagpole, but
Not quite.
the
Yeah.
thing with a flag versus a high type flag, flags show up all the time. High type flags are a bit rarer because you need to have 100% move. Uh, let's see how much of a move this is, right? So from here to there, that's 65%. So
Right.
not quite. Well, what if we start the flag from down here? Well, it has it from down there,
Yeah.
but how long of a period is that?
That's 5 months.
Yeah, that's a bit too long. Right,
Yeah.
so one,
Exactly.
2, 3,
Exactly.
4, 5, 6, 7, 8, 9. Well, it's 1 week shy.
Yeah. Yeah.
It's a very strong move.
Yeah. It is. No, but obviously it's due to the underlying the copper prices themselves. The other thing I was mentioning to you earlier was restaurant stocks. One of them you've got on your watch list, which is
Hmm.
Texas Roadhouse. But then I came across Chipotle, Wingstops, and the other one which is on there is SG.
Yeah, Chipotle's been great. Chipotle started its move out. I would say that Chipotle started its move back here.
Oh, yeah, on earnings. Yeah.
Right, and that's the thing with earnings too. Like if a stock is about to report earnings, don't necessarily shy away from it. I wouldn't buy it ahead of earnings, right? Like I wouldn't be buying it the day before earnings, but the day of earnings. Take a look at where a breakout level could be, and maybe set an alert there to see how does price break through it. How does price get there? What does it do around that level? Because that if you're just looking at the chart and you didn't know that that was earnings, you might have seen, oh, it's coming up through the 50-day. It has a resistance level right around here. And then maybe there's a play there. But
Yeah.
price broke out and ran. I wouldn't be... even though the pattern recognition flags this is the breakout, to me that looks very extended. Right.
Well, it almost looks like a double base bottom.
Yeah. I think that that's the case, and perhaps you could find an entry somewhere over here.
Exactly. Because it breaks out of that candle, the earnings candle on the next day is just so wide and loose. And then it closes near the bottom, which is like a rejection. Then you've got an inside day. Then you have the impetus to get out of there. So it coincides with the top of the W, the middle of the W, more or
Right.
less.
Right. For every trade, we want to think about both reward and risk. I was reminded about this just the other day too. I saw a tweet from Mike Bellafiore, who's
Mhm.
the
Yeah.
he's written a couple of books and he runs SMB Capital.
Hmm.
Uh, and so uh, to think about both reward and risk, that's why like I would look down here as an entry. Another spot that's interesting to me would be somewhere in this vicinity or somewhere in this vicinity. Why? Because prices starting to pull back and and develop a support area. So if I'm thinking about reward to risk over here, well, where might price fall to? It has momentum,
Yeah.
and so there's that part of the trade. But where if this fails, where do you get out? And also, price has been running for a long time and holding a 5 day moving average, so that's a sign of strength. But that's the level that typically fails.
Yeah. It needs to consolidate.
Yeah. So
Okay.
there. Um, let's reset this chart. Now it's starting to pull back towards the 50, and we'll see. Well, earnings is around the corner.
Exactly. So that's one I want to watch. What's the reaction to earnings? What are the earnings like? And Wingstop is the other one in the sector. Well, Tish has popped on, so we can look at SG if you want. I know
Oh,
Tish will want to look at that one. It's the same sector.
oh, for this one, before we move on, I'm just gonna put a little pivot line up there, and while we're here, I'll clean up some of these other
What I was
annotations on
looking at with
here. But
CMG is perhaps a potential downward trending line last week and a half, 2 weeks. Getting on a breakout.
that seems aggressive.
Really? Okay.
The reason why is because if we could really
There.
draw trend lines anywhere.
Oh yeah, that's true.
Um, if this were, well, let's say we were looking at a cup with handle, uh, maybe I would start to look at something like this. But the way that this broke over here, I wouldn't use this as an entry yet.
Okay, but you could argue that that's like a mini flat base, right? Up there.
Maybe.
Well,
How
the
many?
last month
How
or
many?
so.
How many weeks is it? 1, 2, 3, 4, 5. Uh, yeah, you could make a case for it. Um, is it a quality one?
Yeah,
Um,
right.
yeah, the price action seems to be a little all over the place, but the relative strength line is in the right spot,
Hmm.
right? Well ahead of the price action, and also on the daily too.
Yeah, exactly.
Generally, you like to see price drying or volume drying up on the right side of the base. Here you have a big expansion, but well, what's the price action on that bar? Well,
Yeah,
it's a little indecision, right? So price broke down, but it did close off of its low. So there is some evidence of maybe there's buying there.
well, Friday's market action was pretty lousy across the board, wasn't it? So to
Yeah,
be expected to some extent. But I mean, you could literally draw a mini flat base up there on the daily as well, can you?
uh,
Yeah.
yeah. So let's draw a horizontal line over here and look to the left, and there's some support over here, and
Hmm.
there's the gap fill area. So we'll see if what happens between now and the next couple of days. Does the 50-day catch up a little more? I would suspect that that's the 10-week line right there, and it's fairly close.
And earnings are on Tuesday, I think.
According to this, looks like
Wednesdays. Yeah,
Wednesday evening.
Wednesday. Sorry. Yeah, Wednesday.
But yeah, always double check because uh, TradingView is pretty good, but they're not perfect.
And let's do Wing and SG, perhaps. Yeah.
Sure. So here's Wing. Yeah, well, Wing testing the 50.
Hmm.
Wonky action.
But a similar base, right? Like a flattish base up there. A lot of
Uh,
ants on the left.
well, thing with ants too. Ants could be a positive or a negative. Ants could show quite a bit of. They show strength, right? Like that. That's the thing that ants do. They show strength, but when is the strength coming? Is it at the beginning of the move or the end of the move? The way to figure out if you're closer to the end than the beginning is to zoom out and see how far has this thing gone. Well, if the move started back here in November, like
Wow.
many stocks have, and this thing is run 100%, is
Okay.
this closer to the beginning or the end?
You mean, is that sustainable? That's the question, right?
Well, sometimes when ants show up towards the end of the move, it's showing a late stage buying frenzy.
Right.
So whereas ants back here at the beginning, that would be very positive, right? Because you're showing like all that enthusiasm as prices breaking out of that initial long-term base, right? This base was from May of 23, and then finally starting to get out of here in November of 23, right? So 6-month base. And then you get ants over here. That would be very positive. But after prices already moved, this could be a late stage buying frenzy. And so
Right.
far, this is stage 3.
Yeah. So it
Right?
needs to consolidate and rest, right?
Consolidate, rest, and I would prefer to see the price action tighten up. Right,
Okay. And
so we've
earnings.
got this area, we've got this that's all over the place. That this needs to tighten, be less volatile, and then it would be something that's constructive. I wouldn't touch this.
Okay. And earnings are what? Thursday, I think.
I think so. No, Wednesday.
Ah, same as Chipotle then. Okay.
Yeah, Wednesday morning.
Ah, so before Chipotle. Okay. So that's going to be interesting because that could have a bearing on Chipotle stock during the day. How Wing reports
Yeah,
pin action. And let's look at an SG because I know Tish will want to look at that one.
yeah. That one is on my radar,
I
uh,
know
and
that's an interesting
I
high tie flag. That.
yeah. So this is one that's run a long way. And yeah, I spoke about it in the video. I'm not sure if, who had the chance to watch it because I posted it late. But this very strong move, right? And so this is where ants show up, and I would consider this a positive because price just broke out of this long consolidation over here. Just started a stage 2 uptrend, and now you've got the ants. Yeah, that's power. And where price is pulling back, volume is dried up, and you started to level off down here, and that leveling off down there is the 10-week line. So I would be very interested in getting into this if price could break out, but I wouldn't want to get in down here. I'd want to see it take out those recent highs, but because if price, let's say price travels from down here and then comes up through this and then hits the pivot area, I would rather come and see how's it getting through there. Is it getting through there on volume? How's the rest of the market doing? How's the rest of the sector doing? If I'm checking off all those boxes, then maybe I take a stab at it. But let's say that volume is weak as it's doing there and the market is iffy, then I'm taking a pass. And the reason why is because you still have all this in its face. You have the declining 21, declining 10. The general market matters. And so
Yeah, no, and it'll be interesting to
it's
see
less
how
clear.
Wing. It'll be interesting to see how Wing and Chipotle report because that will obviously have an impact and a bearing on this one. I think this one reports next week. No, the week after. I think it is.
Uh, According to this, it's May 9th.
Right, so it's the week after that. Okay, but it will be interesting to see what pin action there is between Wing, Chipotle, and these guys as well. Because the other one I was looking at in this sector is Carver, but I think it's just fallen off the edge of the cliff.
They, well, it needs time.
Yeah, it's below the 50 right now, and that's
Well, it's below the 50, but that's not a bad break. That could just be a shakeout.
Right.
Right? So it's not, nothing here is telling me that people are leaving the stock it like a stampede.
No, that and volume is drying up actually, which is not bad.
Yeah, that's a pretty low volume break of the 50. And
Hmm.
so well, where's price right now? If we draw a line from the prior peak over there, it's coming in towards a prior resistance level. We'll see if that area holds. Long-term players are probably, well, I would be very interested to see what happens in and around here, because that seems like a spot where if you're longer term and you're trying to add to a position, that you maybe you're looking somewhere in this area. I'm not a buyer yet, but I'd want to see it consolidate and become a little bit more constructive. But I could see how a longer term player might look at this as an area to add.
Okay.
And if not over here, perhaps down here, closer to the 100, because you have a spot down here that served as prior resistance as well as back here.
Hmm.
And if it does
Excellent.
get to this area, I'm actually going to set an alert on this too. Just so that way I'm aware of, well, what happens if price comes down there.
Hmm. Okay. Financials. I had
Did
Allstate.
anybody else have anything that
Right.
you wanted to bring up? I think you had mentioned uh, asking that. Yeah, Alberto, you had mentioned asking Tish a question, or did
No,
I?
I know she's
Uh,
interested in the SG. I'm not sure if she wants to ask anything more about SG or anything else. Floor's open.
Good this moment.
okay.
And I was looking at financials. Banks and insurers been doing pretty well actually the past few days, which surprised me. And well, typically gold miners as well, but that's commodity play. But in insurance also, and I saw the auto players, auto insurers, Allstate and Progressive doing particularly well, which surprised me. You got Allstate on your list as well.
Yes, I do.
Mm.
And Allstate is one that tested the 50 and leapt off of it.
Bonds, exactly, and Progressive as well. I think PGR.
Uh, PGR.
And earnings just around the corner.
Yep.
Progressive already reported, and you can see the reaction there. And that thing's at, I think it's all-time highs. RSI line is doing really well, or the RS line.
Yep.
It's, I'm not sure if it's actionable though. Is the
Heavy
question.
volume. It's a leader. Now there's no. Uh, I don't see a setup here.
Okay.
If anything, it just broke out. It's a little extended. Maybe keep it on the radar in case if it pulls back. Right. So if this is one that you're interested in, maybe you set an alert somewhere near the breakout level, somewhere around here.
Yeah,
Right,
the
so we'll
pivot
set an
point.
alert right there. And then if the alert triggers, then come in, take a look and see, well, how is price moving? Because sometimes you'll get a nasty slice. And if it's a nasty slice, that's not one that you want to touch. But if the price comes in and it's sitting there, and then you drop down to, say, a 30-minute, and you see some action. Let's see if we could find a decent sample on this chart. Pullback. Like let's say that you're getting something like this, right? Like, price pulled back, it's tested the pivot, and you see it just kind of gradually coming back in to a moving average, and it's kind of going sideways over here, and maybe it's rounding out something. Well, now all of a sudden there's another pivot right here.
Yeah.
And let's just draw a line and see what that looks like over on the daily. That's back here, right? You could barely notice it over on the daily, but you might see that it's right near that 10-day moving average, and so you might be interested.
Yeah.
And calculate, well, what's my risk on getting in near the low of the day and setting a stop just under that low? Well, that's 1%. Well, what if price were to gap down the next day? Where's the next level of support? Look to the left over here. Well, that's 4%. So how should I size in case if price does gap against me, even though I want my risk to be 1% instead of 4%? And that's how you could try to do both things.
Okay, so how would you handle Allstate, which is on the list?
With this?
Yeah.
Hmm.
It's like a base on base for this building, right?
Ah, good eye. Yes, that is exactly what it's doing. So you have a flat base over here, and you have what could be a flat base, another flat base. 1, 2, 3, 4. So it's working on, maybe it's working on the 5th week. Maybe you interpret this as a square box, which O'Neill also mentions in How to Make Money in Stocks, a 4-week base. Just came right off the 50.
Yeah.
At this point, I'm not doing anything with it because of the proximity to earnings.
Earnings, okay. RS is looking really good as well. High before new high. Right, so just watch for the time being, yeah?
That's what I would be doing, but maybe I'm too much of a little too conservative.
Because your pivot would basically be a line straight across the top, right?
Yeah, exactly. And so if it breaks out with power, and it has had some power the last couple of days here, then I would look to have a stop below Friday's low. But is this a momentum kind of market? Maybe it is. We are in snapback rally territory.
Yeah, depends on the sectors, I suppose. Like we said, commodities.
Right, and this is the right sector. The sector has some momentum. There's a lot of setups in this sector.
Exactly. And then the other one you had is Amex, and I'm looking at pin action, also Visa and MasterCard, because they're all the same. MA is MasterCard. AXP is the one you have, which is AXP. American Express. Amex.
Yeah, this one already broke out. This one I have
on earnings
in the neighborhood.
6%. Yeah, did really well. But look at MasterCard and Visa.
This could be another one too. So now I'm starting to set more alerts just to get ready. The problem with setting so many alerts like week to week is that could be difficult to manage on a spreadsheet, right? So I'm not sure if you guys looked at the spreadsheet yet, but on the action list, I have a working orders spot and an alert spot, and I'm gonna keep the alert spot for the alerts that I'm actively talking about, right? Like so I mentioned SG and that alert and the plan with that, so I have that one there. But if I have old alerts hanging out, that list could quite easily get fairly long. Like on this call alone, I think we've added maybe about 3 or 4.
The more the merrier, right?
Maybe it's easy to get too noisy as well.
Yeah, exactly. Deluge of alerts first thing in the morning. You don't want that. So, like I was saying, American Express and Visa are the other ones. MA and V, which are in the same sector.
All right, so let's come over here. MA.
Dipping down. 21.
Yeah,
no, what's that? The 21?
That's the
No, that's
100.
the 100 day. Ah, right. No, sorry, I'm getting confused then. I thought that was the 21 day. No, not looking as good as then. Not looking as good.
Yeah, no. Well, it's at a spot where maybe it rebounds off of here, right? So that's where many of these short moves down. If we take a look at where price is at, if it's at a long-term level of support, it could get a little bit of a bounce. Now, that's not one that I'm looking to jump into, but let's say that we're considering the rest of the sector, right? Maybe you like American Express, and you want to take a look at, well, is American Express the lone wolf, or is there something going on in the rest of the sector? Well, here's some evidence that, well, maybe this one gets some lift because it's at such a long-term level of support.
Right.
Can you make a case for somebody buying this? I think that there's a case for a lot of snapback rallies, even in some of the more beat up names. Like, look how beat up ARM is.
Yeah, that was huge.
I think that there's a case for a snapback rally, just given for how much it fell.
Yeah. Or the other side of the coin, that the AI bubble is perhaps deflating.
That's possible too.
Because SMCI and NVIDIA action yesterday was pretty scary.
Yeah. Right. Oh, and that was something else that I wanted to talk a little bit about too. Right. I spoke about this in the video. So if you saw the video already, I apologize for being redundant. But if we come back over here and we take a look at the trade that was taken, right? So over here, not on that day, but on this day, price coming back through the 50-day moving average. Strong move, volume, relative strength up, stochastics up, very little danger signals, markets potentially rebounding. This looks good. And that one was taken with an alert. And price followed through the next day and gave a small gain, but then it closed on its lows and then exited with a small gain and 5 danger signals on the day. Now, you advance, and then, prices giving you a small loss, and then you advance another day, and you have this catastrophe. So, it's not where good setups can't be taken. Good setups can and should be taken, but we need to consider the market environment. And so selling quickly when you have a small gain is better than trying to hold out.
Yeah.
Because this has been what's happening.
Yeah, and look at the volume in that stock on Friday. Horrific.
Well, even if it didn't have the volume, right? So let's say that volume was down here. I wouldn't be a happy camper either way.
No, but if you look back, say, a month, that huge... No, the next gap down, that one there, that big candle. Look at the volume that day as well. No, the one before. There, that one. and the day before, it was building up, and saying, and all of a sudden, kaboom! For 3, 4, 5 sessions, it just slipped $150 or whatever. And here it almost did it in one day. It's just 3 sessions actually. It did almost the same move in 3 days. Sorry. So it has a quote unquote a history of volatility.
Yeah. Well, it's had it on the way up and now on the way down.
Exactly, because look at the previous one as well, which is about a month before that. That was pretty horrific as well.
And earlier too, you mentioned the ants, right? And
Yeah.
so this is a good point here too. So the ants showing up. This is not like, oh, this is this is a time to be buying into all this. No, this is a sign of a top. Especially as like prices gapping up over here, and this is on top of not just breaking out of a long base, but a base that had already run 200% back here, and then another 100% back here. This stock has run a long way from 100 in May of 23 to 1,000% move.
Yeah. Well, remember this company was in the Russell. It was worth less than 5 billion, and then they switched it into the S&P and Nasdaq because it was suddenly worth 55 billion. So just goes to show what can happen.
And it goes to show why looking at the stock historically is important too. Because if we didn't do that exercise of looking back at what was the price at last year, and we were just focused on this over here, it's real easy to get sucked into, oh yeah, I got the leader, and AI is gonna be huge, and I just read this on Market Watch or Yahoo Finance or fill in the blank, and so let's buy in. It's pulling back. Context matters. And how do we get context? You could just look at the chart. Gives you all the context you need.
Nvidia on Friday wasn't exactly reassuring their action either there, and that's the leader. Like, look at that candle.
Oh yeah, that got nasty as the day went on.
Very. And where's support there? I mean, it closed at the very low almost.
Well, support would have been here right at the 50, and then that's why as soon as price breaks support, I don't want to sit around and wait. I'd rather buy back in than get caught in this.
Yeah, than try to catch a falling knife. Yeah. Okay. Well, I'm done. I'm not sure if anybody else wants to ask a question, but I'm done. Thanks, Mike.
All right. What else should we discuss?
Sorry, there was another one. VITL, which is also on your list, and coincidentally, my screen has also come up with it. VITL.
VITL.
What are your thoughts on this one?
Not quite ready yet. Like it's got maybe this is a 3 weeks tight. Up here, so you could make a case that this is a spot to add. I wouldn't start a new position here. I'd rather see it flatten out a little bit longer. But it's fairly strong.
Sorry, and the MAs to catch up, right? Come back to the MAs. Right, okay. That's fine.
Yeah, here the answer are there, and it's a sign of strength. Right, because you just broke out of this long base. It's been basing for about a year.
How long is that?
The answer there.
How much is that pull? That's a good 80% or so, right?
Yep.
Yeah. Okay. Interesting. Okay. Thanks.
If it pulls back towards the 21, I'd look for it to consolidate around there. Like maybe give it a few days to round out something and then try to get it. Because you see like how long it's been above the 21 period. I wouldn't expect it to come down to it once and then immediately go. Maybe sit there for a couple of days and then round out something and then go, or maybe be a little bit below the 21 period, right? So at this point, let's zoom in a little bit closer on this.
I'm just conscious that earnings are about a week and a half away. That's
right, all. Right. So let's say the price comes in and then it comes back over here. And at this point, you're probably below the 21-day moving average. And let's say that it falls a little bit lower. But where's price? It's right around here, right? So price is right around a prior resistance level. That's when I would be looking for it to maybe make the U-turn.
Okay. Great. Thanks.
Yep. Other thoughts or comments or questions?
Mike, on this morning's video, you were talking about your SQQQ trade.
Yeah.
Regarding the management, I mean, your strategy is to, generally scale out on the way up, but you scaled out, after a couple of days. Was that because there was a lot of danger signals and you didn't want to let the rest run, or what is it that got you out of, the remainder of your position?
On that day, there was evidence of a potential market rebound, and so given the evidence of the market rebounding, and given the choppy nature of it, right? So the like gap opens and things like that. I wanted to nail that down versus letting it cycle into a loss. Whereas in hindsight, the better move would have been to take off something, get stops to break even, and let it run. Right, like that. That's the move that would have worked in real time. Would that have been the proper answer? Maybe.
Okay, so there were some other things like in the underlying NASDAQ, new highs or lows or whatever that, sort of gave you an idea that the market could be rebounding.
Right. Yeah, so sometimes I have a tendency to be more defensive. And to play a lot of defense versus being on the offensive, and playing a lot of defense. Sometimes it saves my butt, right? Like with SMCI, saved my butt, right?
Definitely.
But sometimes I sell way too early, as in this case, and to a lesser degree in this one. I'm still leaving some money on the table.
Mike, you can't go broke selling profits, right?
Well, you can.
You can't go broke.
No, I'm saying that you can go broke taking profits. If you take profits way too early all the time and you're not allowing the math to play out, and then you could just be a break-even trader.
Okay. I always thought that if you take a profit, you can't go broke.
Well, let's say that
you can't get rich, but you can't get broke. That's what I'm saying.
perhaps. Yeah, that might be a truer statement.
Yeah.
Other thoughts or questions? got about 15 minutes left. I'm happy to sit here if you guys think of something, but yeah, if not, we can give you 15 minutes back.
Mike, if you want to go back to Allstate, I tried to place a trade on Allstate yesterday. Didn't fill, unfortunately. An options bearish diagonal call spread for credit, and
And explain to us what that means.
basically, when I look at Allstate, I said to myself, we've had that great move last 3 days, and looking at it on a weekly basis, I'm making a bet. I'm making a bet that the stock is going to go sideways or slightly down and start to consolidate. And say, how can I gain from that outlook? And I could do that by selling a spread for income. And my plan was to buy the 175 calls that expired in June and sell the 17th of May 170 calls for a 90-cent credit. So I have I would for waiting, I would get paid 90 cents for waiting for the month. And of course, if the stock starts to go up, I could then buy shares as a hedge. This particular call spread is slightly bearish. It's like about a negative, slightly negative delta, but it's got you're collecting theta and your long vega, and we're going into earnings. So if volatility of the options increase as we go into earnings, that's going to benefit the trade. So I have more than one way of benefiting. One is time value. I'm collecting theta as time goes on. If IV increases, I'm long vega, so it's going to prop up my position and gain value. It help my position, so I can close it out for a profit. And if I'm wrong, if directionally, because I am slightly short delta, the way to hedge it would be to buy a few shares and cover my position. And by buying a few shares, what happens is on the upside, I basically can minimize my profit, but still stay above break even by buying shares if the stock does break out. Without the shares hedging my position, basically my risk break even is around 170, 175 short term, and at expiration 179. So I don't know. I mean, I may not get the fill. I'm not going to sell it for less than 90 cents. And it's putting a diagonal. Normally, when you put a diagonal on, you have to pay for it. You pay a debit. I'm placing a diagonal and I'm getting paid a credit. So I'm being paid to wait. So if I have to watch a stock, I want to get paid. That's my philosophy. I don't want to sit there and see it go sideways and not get paid for it. Did I lose you?
Okay. Yeah, no, I'm still with you.
Okay. I don't know if it makes sense or not. Obviously, the outlook is real critical. I don't expect the stock to explode. It's not that volatile. It's not like a small cap. So I can adjust if it moves against me. And the move against me is up, and it has to be up significantly, Right now it's trading at what, 172, 173. So if it starts to move up if I were in a position and it started to move up on Monday, I would buy shares to hedge the position. It's got very, very little gamma at this point. So um, by buying like 20 shares or so on a contract of I would say, yeah, if you were to sell, I'll go back to one contract. With one contract, you would only have to buy about 11 to 15 shares to hedge the position on the upside.
Okay. And yeah, it doesn't move very much. It moves about less than 2% per day. Earnings is around the corner, so how would you handle an earnings move?
I would, right before earnings, I'd reassess. And so right before earnings, my position would be profitable. Earnings is May 1st, right?
Yeah.
So on April 30th, if the stock were right where it is right now, I would have to reassess and say, okay, what do I want to do? Do I want to take it off, keep it on, hedge to earnings, which I could do, or take off the profits. Because if the stock stays where it's at, this position will be slightly profitable right before earnings. With the current assuming volatility stays constant, it doesn't go up. But if it still would be profitable because of the you're collecting money on your time decay. So I don't know. We'll see what happens. Usually when something looks like it's pretty worthwhile, you probably don't get the fill. The market may not give me 90 cents. It may give me 80 cents, 70 cents, and I'm not going to take it for such. I'm going to monitor and learn from it. That's all.
Okay. Yeah, we'll see how it plays out next week. It looks like there's a good amount of strength in it right now. I'm curious what the sector rank was. Let's see or the group rank. Well, what's the group rank on this? ALL. Group rank jumped from 60 last week to 52 this week. So a stock that has strength, the leader or one of the leaders in its group, if not the leader, relative strength line at fresh highs, price at fresh highs, and a rapidly improving group rank. Yeah, the only reason why I wouldn't, if the market continues to fall or consolidate, but if the market snaps back, this could be one of the ones that are the first to break out.
Right, and if it broke out, that's when I would buy the shares on the breakout.
Right.
And then basically, the shares would overcome this position. And so this position, even though this position loses, the shares overcome it, and overall, you're still profitable because you're making money on the shares. I don't know. I'm going to look at it. We'll see what happens.
Well, so if you're betting on it to go sideways or down, why not do one that's already beaten up, like a Tesla?
I don't know. I got to look at it. Nothing wrong with that. The reason why I'm looking at Allstate was because of implied volatility, the premium and the options, the fact that I'm putting a spread on for a credit, a diagonal for a credit. It kind of intrigued me.
Mm-hmm.
Allstate, Tesla, yeah, Tesla's been going down, and I haven't looked at it. I haven't traded it on the downside. It's definitely out of favor, that's for sure.
Yeah, it has been for a little while.
With this one also, we have earnings coming up, right?
Yeah, it looks like earnings are right around the corner here. Well, earnings on Tuesday.
Yeah, see how it reacts to earnings.
After being beaten up this bad, I wouldn't be surprised if you get a jump.
We'll see. We'll see what happens.
Right?
Traditionally,
Because you're
Tesla,
already below support from over here. You just took out those lows, and the next stop might be 100.
yeah, and also beware, Tesla on earnings release tends to perform badly. And this time around, I think Elon is presenting the robo-taxi thing, which God knows where that's going to go.
They're having a lot of issues. Their
Oh, yeah.
Cybertruck is being recalled, I heard.
Yeah. Reducing their workforce, and they've only just opened in Germany, so it's crazy times. As competition is coming from China, big time,
Right.
and that's the issue. Pricing has gone down, margins are being squeezed, so the darling of the sector is being really hit.
And he's
Right,
laying off a lot
and
of employees.
say again, Tish. I'm sorry.
He's laying off a lot of employees. I think
Yeah,
it was a
10%
huge
reduction,
amount.
10-11%.
Right. So, are the people that are able to move price, are they finding about that now, or did they find out about that back here?
Well, the trend in terms of
Or
profit
back here?
margins has been going on for about a year now. So, yeah, and the competition has been increasing, for the past 3 years. So, the signs were there. There's no doubt about it.
Well, and those tops were like when he took big money off too.
Mm.
You remember that? That was like the news.
Yeah. Company's certainly got his back against the wall right now.
Yeah. Sal, I'd actually like to get your opinion on an option strategy that somebody was telling me about the other day. And it actually involved Tesla, but you could apply the strategy to anything really.
Okay.
So the strategy was to sell puts on Tesla, and at this point, he was looking at selling like the 170 puts, right? So to sell them a week out, and if it gets filled, then you're willing to take delivery of the stock, and then just sell what would then be an out of money call if you end up with the stock, right? So the idea is to sell the put, you collect the premium, and if you end up having to take delivery of the stock at the higher price, then you just sell the calls after you take delivery. And so it'd be like, okay, I'll sell a 170 call, and then you sit with it until you end up letting it go.
Right.
Does that sound like a nutty strategy or what?
It's
Or
not
something that
it's
could work?
it's not a bad strategy if the stock was bullish, neutral to bullish. If it's bearish like Tesla is right now, I wouldn't necessarily do it. And if I look at the 170 call right now that expires on the 26th of April, you're basically collecting 56 cents of time value. So he's trying to make 56 cents basically. Because that's the bottom line. Intrinsically, most of that's in the money, and you're gonna get assigned, and then turn around. So you made your 56 cents, and now you got to turn around and basically sell calls against it, right? So what's
Yeah,
the
you take
difference?
delivery and then you just sell calls until you
Yeah.
make your
So
money
what?
back to the upside. But that upside is going to be a while.
Right. So turn around now and say, okay, why not just turn around and sell the corresponding call that's trading for 80 cents? It's out of the money and collect 80 cents a time premium in 1 week instead of 56 cents a time premium. So to me, I'm not saying it's a bad strategy. I'm saying for Tesla in this moment in time, I wouldn't do it for 56 cents,
Mm.
because basically it's capital inefficient in a sense. Okay, you're selling calls. You got to keep margin for the cash secured put. Then you're getting assigned the shares, so now you're gonna have all this money tied up for the shares. And now he's gonna sell calls at the 170 strike. I assume is that what his plan was? Because you bought it at 170, so you might as well sell calls at the 170, right?
Yeah.
Okay. So now you own the shares, you've collected 56 cents, and now you turn around and you're selling calls against it. And if you go out another week on the calls, you get maybe $1.50 for them, and your position has downside risk, right? It's not like you're neutral or protected or defined. It's you're owning stock and you're selling some premium against it. If the stock was neutral to bullish, I would consider it, but the way the stock is trading right now, I would find there's better ways to make 56 cents. Is what I'm trying to tell you. Like you were just saying, I could turn around and sell the 170 call for 80 cents or even do a call spread out of it, uh, and collect like the same premium with less risk. Let me put it that way.
Mm.
By
Okay.
selling like a bearish call spread and collect my 56 cents or $1 that way rather than say, hey, I'll buy the shares in a week. I'm willing to collect my 56 cents for 1 week, and then I want to buy those shares, and then I'm stuck with the shares they're right now being sold off. To me, that with this in this current environment, that's not the trade I would put on. Like I said, I would go with a bearish call spread.
You know who
But
used to do that?
it's a good strategy. It is a good strategy if you want to buy a stock that's neutral to slightly bullish, and you want to generate income around it. You sell cash secured puts and then sell calls around it. I think they refer to it as the wheel strategy. Is that what you're talking about, Mike? So if you're talking
I've
about
got no
cash,
idea what the strategy is called. He was
yeah,
just telling me
if
this
it's
idea, and I'm like, this looks like it's going down to me, but
no, I wouldn't do it. I wouldn't do it on Tesla. I would do it on a stock that's neutral to bullish. I wouldn't do it on stock because it's basically you want to lose money. The stock's dropping. You want to buy low and sell high, not buy
yeah,
high and sell.
right, exactly, and that's why I thought, you know what, I time to bring in the big guns. Let me talk to Sal.
Do you know who used
Thanks,
to do
Mike.
this? Who used to do this for quite a few years and was successful at it until one day just blew up? Long-term capital management.
Yes, yes.
And then never heard of again.
It was the late '90s, right? '97
Yeah,
or so.
and Volcker had to come up to the plate and bail them out and all that, which ensued with the Russian debt crisis. They were basically doing exactly that, selling puts on things which they mathematically were proving had very little opportunity of going against them. But in the end, it happened.
Black Swan hit him.
Exactly. Exactly. So, selling puts is a great cash strategy until one day suddenly it implodes.
Right.
Yeah, you can't play it even when with those kind of odds. If you're playing that game an infinite amount of times, it's gonna eventually blow up. It's
Yeah.
You're
inevitable.
playing with fire.
All right, so we're at the end of the time, a little bit over, but this was a great conversation. Thank you all for showing up, and I hope you have a great rest of your weekend.
Thanks, Mike.
Thanks, everybody.
Happy